there are some things in life that you just wish you knew when you had started trading. If you'd just known those one or two small things when you started out as a beginner, that would have made you a profitable and a successful trader right from the start. So today I'm going to show you one of those tricks. I'm going to take you to the charts and I'm going to show you one of the little tricks that I use to get sniper entries. And I wish I'd known this when I started out 30 years ago. I've been doing this for over 30 years and I keep on doing the same thing over and over and over again. And believe me guys, if you're not finding it boring, then you're doing something wrong, because making money can be quite a boring thing because you've got to keep doing the same things over and over again, and you've got to keep doing the same boring things over and over again to be a successful trader. Otherwise, you will never make it and be that successful trader. You'll always be tracing that game, that wrong thing or something new or that different system. And if you keep on changing your system and you keep on changing your methods, you know what's going to happen, don't you? You know it's just going to fail because you keep on trying to learn a new system every 5 minutes. I'm not saying don't learn my system and don't follow my system, obviously. I'm trying to get you to be a profitable trader, and it's all on the house and it's all from me, but it's all in the strategy. It's not in the system, because trading, as I always tell you guys, is a 50-50 game. 50% of the time, if you take a trade in the market, you've got a chance of winning, and 50% of the time, if you take a trade in the market, you've got a chance of losing. And it's all about how you manage that strategy and lose less on your losses and make more on your wins. Why is it a 50-50 game, you say? Because I've got an edge, I've got a strategy. Everyone in the stock market has got an edge or a strategy, or they believe they do at least. Most of them believe they do. Otherwise, they wouldn't be trading. They wouldn't be doing this. The whole point is there's a willing buyer and a willing seller. Somebody believes it's a good sell. Somebody believes it's a good buy. It's a 50-50, guys. Somebody's got to be right. Not everyone can be right, because if everyone was right, the stock market would be going up in a straight line. And I don't know if you've noticed, but it doesn't do that. It's got these jagged edges and it goes up and down as it goes all the way up or down. I just thought I'd let you in on that. And by the way, guys, trading is risky. If you don't like risk and you don't like losing money, don't trade. Just remember that 80% of traders do lose money. After we've been to the charts and I've shown you the little system or little trick or little sniper entry that I use, then we'll go and we'll talk a little bit about how the fear will affect your trading and how you can overcome that to make this a successful strategy and keep you profitable in the market. And after the charts, we'll also go and tell you about the free gift that's there for you and what you can get on a daily basis from me as well. Let's go to the charts, guys. Let's go and see what the sniper entry is all about. Sometimes there are things you just wished you knew when you'd started trading. Today on the account, we are trading the Great British Pound US dollar long. And what you'll notice here is I've got it on an H4 and I've got it on an M5. So I'm going to show you what that's about. And this is going to be, that's our funded trader account, by the way, the one we're going to be trading live together. I'm thinking of doing the European session this week, and we'll do it on Wednesday most likely and take it from there. So I've taken a small trade there, and the reason I'm doing that on the funded trader account is the one thing I did notice on the funded trader account, let me just bring it back so we can just see here, is that you're only allowed to lose $1,000 a day. So even though it's a $25,000 account, if you play it too much, you could end up blowing the account. And I've got to keep it open for you guys. I don't want to blow it up. So I'm going to just keep the trades a little bit smaller on this account. I'm not using my main account because I don't want hackers seeing my account numbers and things like that. So I'm trying to keep that to myself, if you don't mind. Let's just have a look at the Great British Pound US dollar, and let's just see what we've got here. So you see now on the H4, and you've done the day charts and those types of things. There's a demand level here. And clearly there's a green bar, and we're looking for a long trade out of here. And that looks really good. We're thinking this will be great. This will be a nice trade for us to take. But we don't know when to take. We've got to wait for this basically to close. And maybe you don't want to sit the whole day and wait for this to close. So what you can do is you can go down and take it down to the 5-minute chart, the 15-minute chart, whatever you feel like, and then just go and have a wee look there and see if there's a trade coming up there. And what we can see here is there's a resistance over here at 131.46 that's developed, no big deal, and there's a support that's developed down here at 131.30. So we've taken a long at around the 130. Well, where did I take the long? I can't even remember now. I think it was 131.35 or something like that. And off she goes. So it could go short, it could go long, no problem. But the stop loss is way down here at the 130.5 or something like that for the 4 hours. So I'm quite happy with that. And we're looking at a take profit of 132 or something to that effect. But what I've done is I've gone down to the 5-minute chart and I've looked for the trade. In other words, it gave me a couple of red bars, gave me a green bar. So I took the trade on the 5-minute chart on the next green bar with the hopes that it'll continue on long. There's a bit of short coming in there, so that's always a bit tricky. Maybe it's like not too happy about that, but it's kind of like a way to get a sort of sniper entry into the trade. You're looking for an area where you can trade in at that price and you're not sure where you're going to get the best price. Sort of take the time frame down a little bit. These are things I wished I knew when I started out trading. You see on the hour chart as well. On the hour chart, it's showing you a couple of tails here, which is not a great sign, but you know, you've got a green bar, and if the green bar holds, then it'll be a reasonably good trade. Let's just have a look on the 15-minute, what we've got there. Play around with your time frames, guys, and get the sniper entry and have a look. You see, you wouldn't have traded on that red candle, but on the green candle, if this had closed, you might have traded onto that. So obviously I did it on the 5-minute. I took it down to the 5-minute and I took the long trade out of there. And yeah, the trouble with candles is it only shows you one candle up next. You know, it only shows you what's going to happen on the next candle. It doesn't show you what's going to happen overall. So your overall picture is on the higher time frame at the end of the day. That's your macro picture. So what I'm looking at here is this is a bit of a demand level. I'm hoping that green candle now does close there and it gives it a long trade further out for the day. So that's just a little bit of information for you guys just to sort of help you along. I've always told you that we go to the higher time frame to get our levels. So we go to the day and we go and fetch our levels. On this particular case, I fetched the levels on the 4 hour for the demand level. And then I've dropped it down to take the trade, which is, it's just something I thought I'd let you guys in on if you want to try it. So if you're looking for an entry, you just take it down to the lower time frame and look for the entries on the lower time frames and see if you can find entries there for yourself. So that's it. That's how we trade on lower time frames. It's just a little trick that I use because you see on the higher time frame here, we are looking at a head and shoulders, which could have developed. I've put the stop loss way down here, so, you know, if it does stop out, so be it. But if you're looking for an entry and you're waiting and waiting and waiting, you can always look for a good entry on the lower time frame, grab that entry, and then just leave the trade in with the view to it taking the direction you want it to, and if it doesn't, because it's a 50-50 game, then it stops out. So now that you know the trick, and now that you've gained this little insight, and I wished I'd known this when I started out, or had this available to me, let's say, because it's a great way to get in if you're impatiently waiting to get into a trade. You're sitting there and you're thinking, this is taking forever, I'm waiting for this candle to close, when am I going to get into this trade? But just keep one thing in mind, guys, and the one big thing about candles is if you see a candle develop and it gives you a sort of story, just remember it's only valid for one candle further. It's not valid for the whole day, whole year, or whole whatever the situation. It's only valid for that one candle further. Sorry for me looking to the left, just checking the charts out, something I naturally do, just to see if there's any big red figures or something to that effect. So the sniper entry is very simple, guys. It's a simple basis of, if you're waiting too long on the bigger time frame and you need to go somewhere, you got something to do, or you just want to get into the trade for the week, drop the time frame down, have a look on a lower time frame and wait for the entry on the lower time frame. It'll probably tell you which way it's going to go for that particular moment in that particular time. And then you can sort of hold thumbs that's going to do it for the macro time frame, because the bigger time frames are stronger than the smaller time frames, as you know. The fear in the stock market, how do you overcome fear? Fear is a really big thing, and it's embedded into all of our heads, and that's what causes us to be losing traders. Now, fear works in a very funny way when we're trading. If we're losing and the stock is going down, somehow or another, fear tells us to add to the trade and hedge it down with a view to it having a lesser cost, and then it goes back up and you're going to get out at a break even. So that you don't want to lose any money. We've got this inept thing in our heads that says you cannot lose, so don't lose at all costs. Right? So the only way that you're not going to lose is if you can average that down and then let it go back up and get a break even. So that's what all traders tend to start out doing. Trouble with that is it might work once or twice. Third time, it's going to really take you out. That red bar is going to get so long that it's going to be so deep in. And there is a point that you're going to have to get out, give up. It's too much. It's just too heavy. And there will be a point where you say that's enough and you get out. And then you'll take that heavy loss and it will have affected all your other trade. But the funny thing about fear is when you're winning, it's just as bad. Because you go into a profit and you see the profit and you don't want to lose that profit. You haven't made the profit yet, really. It's on the board, but you haven't made it yet. So your immediate reaction is to take profit, grab the profit and run with the profit. Rather than waiting for it to make more profit, you rather get out as soon as you possibly can. And then you actually have more of an emotion or more of an emotional effect when it carries on running after you've sold out and you see all the money that you could have made. And there's an easy way around that. If you watch my last videos, I would have shown you how you can scale your trades up or how you can move your stop losses up, almost like a trailing stop loss. But I don't just trail a stop loss behind my trades. I would rather sort of bring the stop loss up when I see it's more relevant and leave it at that position for a while, not let it carry on trailing. And then when I see the trade has taken off a little bit more, then I'll move it a bit more, or I'll add to the trade and move the stop loss with it. I'll never average down. You see, the point of being successful in the stock market is you want to win half your trades, because then you own the market. And if you win half your trades by simply doing the following, say to yourself, this week, the maximum loss we're going to take on any one trade is $200 or $500, whatever the amount, and then stick to that. And if the trade takes that amount out, let it take it out, move on to the next trade. With the view to every single trade that I take, if I've got a $200 loss, should at least make a $400 win. So I'm getting at least a 2-to-1, and hopefully I can get a little bit more than that on my trades. This way, there's no one trade that's taking my whole portfolio out, and each and every trade that does lose. Look, if you win 10 trades or lose 10 trades in a row, you've got to be extremely unlucky or just a really bad trader. And it's the same as if you win 10 trades in a row, you've got to be the luckiest person on earth, or maybe you really are a genius trader, which I doubt. There's a lot of people out there claiming that their system can win 9 trades out of 10, and I can do that. I can win 10 trades out of 10 if I take a $2 profit on every trade. If I just go, oh, it's in profit, take the profit. Oh, it's in profit, take the profit. Oh, it's in profit, take. Every time I see the trade in profit, I just zap the profit. It's a bit like scalping. Then you'll win a lot of trades. You will. The losing trades are going to hurt you though, because I'll bet you that person who's got such a high success rate has got losing trades like this and winning trades like this. That's the basis of it all. If you want a real 50-50 game, you've got to have big winning trades, small losing trades. That's the point. Guys, the free gift, pop down to the description. Get your free Forex book. It's there for you. It's totally free. It's a PDF. It's on the house. I'm not asking you anything for it. Go and download it. It's on the secret blog. And the secret blog gets a trade of the day every single day. It's just an idea. It's not trading advice. I don't give trading advice. I'm just here to help you trade and to show you how to trade at the end of the day. If you want more on trade of the day and more in-depth information and more analysis and that type of thing, the video every day, then join the membership. It's on YouTube. I'll put a little bit extra out there for the guys, get a little bit closer to you guys in the community. We're going to try the live video this week, next week, this week. We've tried the live video this week, most likely. And we'll see how this goes. We'll see how the live videos keep on going, and we'll see if we keep on going with it, what it does for us. But yeah, guys, thanks for watching. Don't forget, come back and watch Monday's video, and don't forget to watch the previous videos, because they're all there for you and they all show you how to become most profitable trader in the stock market. Thanks for watching, guys. Cheers, thanks, and bye.